Good evening, Strategic Alpha community members. This is 15th of March, and we are up for yet another weekly inner circle session. And in this today's session, we are going to discuss about precious metal, that too more on silver. So, silver, are we going to see a massive breakout ahead? We are going to discuss that in this today's session. So, without wasting much time, let us move forward. So, before going forward, let me just give a disclaimer that Strategic Alpha or Suyog Dhawan are not SEBI registered investment advisors. Whatever we will be discussing in this today's session should be purely considered from an educational purposes and should not be constructed as financial or investment advice. Viewers are encouraged to conduct their own research or consult with a SEBI registered investment advisor before taking any investment decision. So this is the disclaimer which I want to give, because what happens is people follow the groups blindly and then take investment decision, get stuck, and it becomes very difficult. Even in this community, we have seen that people are following the conviction club without understanding most of the facts, because there are a lot of things which goes into taking an investment decision. But so I don't want you to do that. Let us go forward with the session now. So silver is one of the precious metals. Hope everyone is able to see the screen. So one of the precious metals along with gold. Last year in March, we said about precious metal bull run, that we will be in a precious metal bull run at least till 2028. And we have seen gold moving big time in past 1 year. So we are already in a precious metal bull run since last year, and I said that we will be in the precious metal bull run at least till 2028. And along with that, now we are taking a session on silver. And why is that? I'll be talking about that reasons. Let us look at the demand and supply resources for silver. This was 2022 data, and even today that the data has not much changed. The supply for silver is around 1005, and the demand is around 1242, which means there is a deficit. There is a deficit between demand and supply, and of the total production comes from mine production. 18% come recycling the silver metal. So from the 20% of the 27% of the demand comes from investment, 19% from jewelry, and 10% from other demands. Now, from the industrial applications, because this is a major demand source for silver, let us look at from where all the demand actually comes. So, apart from investment, jewelry, and silverware, silver has major industrial applications, including green technologies. So, solar panel, this is a big demand for silver from solar panel, electric vehicles, electrical, and medical. So, these are the uses for industrials for silver. And this is the source, which is Motilal Oswal. And why we are talking about silver is because silver, this is correlation matrix with gold and silver. If we just look at correlation matrix, it is when equities usually do bad, that is the time when the precious metals do good. So the correlation matrix for silver and gold, it is extremely low. Silver, there is some correlation because it is 11.5%, but gold is completely opposite. In fact, when the equity might do bad, gold is a asset class which you can think that it can do well, and highly confident about it, because the correlation is exactly negative correlation. But silver has low correlation, not negative correlation as such, but it is a low correlation. But compared to index, which is like 100% correlated, this is much better. So put together, gold and silver put together, if we mix that both, it becomes a perfect hedge for equity investor, wherein you can expect when the equities can be doing bad, that is the time when gold and silver can do good. But we are predominantly talking about silver today, and let us move forward. So this is world's silver supply and demand. This is 2022 actual. So mine production, once again, we have discussed this earlier also. Once again, we are discussing this. Mine production is 82%, 18% is recycling, silver demand 45% industrial. So there was a deficit of 142. And global silver estimated to have decreased by 439 million ounce since 2020. We are seeing a fourth consecutive year of silver deficit. So silver deficit until 2020, there was some surplus. But after 2020, in 2021, we have seen some million ounces, 96 million ounces of silver deficit. In 2022, we have seen 264 million ounces of silver deficit. 2023, we have seen 184 million ounces of silver deficit. And 2024, we have seen 215 million ounces of silver deficit, which means the fundamentals are highly favorable for this metal. This is what the data says, and the source is Gold Silver HQ. That is the source of this data. Along with that, it is not only now which is the deficit, but in future also. We are sitting in 2025, but in 2030, this projected deficit is expected to be around 120%. That is huge. And the source for this data, you can see this source. So they have estimated that the silver deficit by 2030 will be around 120%, which is this is a big fundamental development. If it happens in the way that they have projected, that it can create big and long tailwinds for precious metal, which is especially silver. So this is the outlook for the next 5 years for silver. So we are already in deficit, but for next 5 years also there is going to be huge deficit. So this tells us about the fundamentals. And whenever we discuss about any asset or anything, we discuss it from a FTVT perspective: fundamentals, technicals, and value and trigger. So this explains about the fundamentals. We'll also go about technicals, value, and trigger also. We'll discuss all those things. And we have discussed now that the fundamentals for silver as a metal is very strong from a long-term perspective. Now let us look at from a technical perspective. So this is technically telling you about the relative valuations. So this is silver versus US M2 supply. M2 supply is like money printing, how much money you have printed in the economy. And if I compare this silver versus US's M2 supply data, so this is underperforming even compared to the money that has got printed. So money that has got printed over the past many years, even recently China has also started printing a lot of money. But that money has not yet gone into silver. This is the data, what it shows, because in 2012, that time silver outperformed the money supply. Today, silver is hugely underperforming the money supply. So what it means is, if incrementally, if other asset classes, because a lot of money has gone into equities in the past 4-5 years. Recently, we have started seeing that the money has also started entering into gold, but it has not yet entered into silver. So whenever the equities do bad, and we have seen that US is at a stage, India is at a stage where the markets are not doing well. So especially when people see a lot of negative returns in equities, they start to shift towards precious metals. And that is the reason why the demand for silver is going to go up. And especially when the money's printing has not yet stopped, that also, because fresh money will not go to equities much more, and there is a high chance that it can enter into silver. And this is relative ratio chart versus M2 money supply, and this tells you that the rally in silver is at a nascent stage. Somebody in the afternoon I was talking that in 1 year silver has gone up 20%. Is it not a bad idea today to look at silver? But this is the thing which you should look at. So this gives you a better clarity. Whatever the move which we have seen is just a trailer, be it gold or silver. But at this point of time, gold has run up a lot. and silver is has been underperforming. But I'll tell you in the later stage why that underperformance is a great opportunity for an investors, because I think silver is at a perfect inflection point, and this is one of the data which I presented it to you. Now let us go forward. There is a big advantage for silvers from a precious metal bull market perspective at this current point. This is silver divided by gold ratio chart. So usually people who have not gone through the ratio chart session, I would suggest you to go through that ratio chart session, which is available on school. It is called as ratio charts, the conviction builder. Just go through that. Otherwise, you won't be able to understand this whole. So ratio chart for gold versus silver versus gold is trading at an all-time low. It is trading near all-time low. That is giving me a sense of margin of safety from a price point of view, not from a valuation point of view. From a valuation point of view, at a later stage, we'll be discussing about it. So from a price point of view, it is trading at extreme where the risk reward is favorable. It doesn't mean that silver might not fall. Silver might fall, but the against the risk which is there in the silver right now, there is better risk reward ahead. So at this point of time, this ratio chart tells us that the risk reward in silver is highly favorable. Now let us move forward with one more data. This is silver in dollar terms. Silver in dollar terms, the high which it made in 1980, which was around $48, that was the time when gold was pegged, and it was used as what we store of value. That was the time when silver sell-off happened, because prior to that silver used to be seen as a store of value. But when gold was replaced, means gold was brought into more into what we say importance, where the store of value was given to the gold. That was the time silver saw a collapse, and since then whatever high it made in 1980, that high exactly touched once again in 2010. And in past many years, from 2010 to we are 2015, it is still below the all-time high levels which it touched in 2010. But right now what has happened is, from 2013 to 2025, we are nearing a 12-year rounding bottom. 12-year rounding bottom even before the big breakout happens. And this breakout is suggesting, if the rounding bottom breakout which is about to happen, and one more important thing which we need to look at is 30-month moving average. 30-month moving average is placed at $26.4. Currently, silver in US is trading at 32.97. Close recently, few percentage points it moved up. It might be trading at 34 now, but we are at a place where silver is trading at a better risk reward, and the pattern upside for this looks from $33 to around $55. This is from a technical perspective. And we might also see a bigger breakout also at a later stage, which we don't know right now whether it will happen or not. But as of now, this is what the chance it is looking like. But as we are saying that till 2030, if silver is going to be in big deficit, there is a high possibility that in five years, we might also see these kind of levels like $90 or something like that, which means 3x. So there is a possibility that if the demand supply gaps increase at 120% as it is projected, then silver might even reach $90. This is what the clean technical analysis is telling us. Nothing should be taken as a recommendation here. I'm just educating you from an education perspective. Please do not take this as a recommendation. Now, one more chart which one needs to look is, this is once again silver versus gold. I discussed this earlier also, silver versus gold. But why I'm trying to say here, this is creating a pattern. Earlier, I just shown you how well the risk reward is, but this is now forming a pattern, silver divided by gold. And this is a triangular pattern. Whenever it breaks out, it can do wonders. This is a pattern which is spotted from a technical analysis angle. Now let us look at one more interesting insight about gold and silver. Especially we are bullish on gold from last year, April 2024. But let us look at gold and silver put together during the financial crisis. What exactly, during all the troubles, equity troubles, how does it fare? So during global financial crisis, gold plus silver put together, when the markets were falling, it were up 37%. During the taper tantrum, it was flat. So it outperformed the markets. During yuan devaluation, it went up 17%. During COVID-19, all the asset classes fell, but it fell lesser than the other markets, other asset classes. So which all this data tells that this is such a gold and silver put together, and especially silver at this stage, which holds a lot of importance from a portfolio perspective. Because if you are not owning these metals, you're not properly hedged. So during the period of stress, gold and silver does much better than equities. So we are at a period of stress. We have been talking about it, that we don't know when the recession might be hitting in US, when the trouble might be going out of, because we are already entered into slowdown phase for India. So when that will be out, we don't know. But there is a huge uncertainty. During the huge uncertainty times, silver does much better. Silver and gold both does much better than the equities. Now, this is silver miners, and we have discussed this case of mining companies. Whenever gold or silver does well, the mining companies, if the silver prices go up by, let us say, 50%, miners might do more than 100%, 150% kind of profits, because most of the price rise in silver or gold directly flows down to the bottom line. And this is an instrument which is called as SIL, Silver Miners ETF in US, which is placed at an inflection point once again, because the price is above 30-month moving average. It has just taken the support few months back, and it has started this once again. The risk reward from a pattern perspective, this is looking like a asymmetrical pattern to me, because earlier, if you have seen, each time when the silver rally has happened, even earlier in 2010, the silver rally happened like 50-60%, but during that time, silver miners were up 136%. Even during 2016 times, silver was up close to 50-60%, but silver miners were up 220%. Even during COVID, silver was up 50%, but silver 40-50%, but silver miners were up 128%. And once again, I think the asymmetry which is there, I think we are at a place where silver miners once again can repeat what it has done earlier in earlier phases. So if the silvers do well, miners are expected to do much better than the silver. And this, I think the risk reward is highly favorable at this stage at $38. Now, one more thing which is supporting our thesis, or will be supporting going forward also, is dollar index breakdown. So we have seen that we have been saying that that dollar is not going anywhere, and it is on a way on the verge of the downside, because we have talked about de-dollarization even during the commodity bull run session when we took. But what happened is, just after the Trump elections, there was a short-term headwind for the long-term trend, and we saw dollar index moving up, but that has failed the breakout. This breakout has failed, and it is called as failed breakout. And once again, the dollar index is below 30-month moving average now, which means 30-week moving average now, which means that there is a high possibility that this time it might break. Multiple times it has tried breaking, but it has not broken. But maybe this time it might break, because as the troubles in US increases, the dollar index should break these levels. Whether it will break 100 or not, that is not a question. What we want is, we don't want big higher levels. Even if this gold dollar index remains in this range of 100 to 105, still it can be much bigger thing, and a best positive thing for precious metals miners, as well as the precious metals itself, and along with that other commodities also. So this is also supporting the thesis. Now, one more important insight, because a lot of people are saying that be highly cautious on precious metals and all, but this data will tell you that there is no need of, yes, because volatility is not a risk. Any index falling down 4-5% in short term, it can happen at any point of time. But over a long term, why this we are today at an inflection point? This is what the data says. The data is saying this is silver versus dollar index, silver divided by dollar index ratio chart. For the first time since COVID, it is making a new high, and we have not yet closed the month, end of the month, because by the end of the month this trend will get clear. If we get a huge body here by the end of this month, by 31st March, it will be very clear. But as of now, there is a high possibility and a probability that you don't have to worry about silver at least. But the strategy to play silver, I'll be talking at a later stage, because these data points helps us in risk management and not in prediction. I don't believe in prediction at all, because I believe if I would have been able to predict all the things, I would have put all the capital into whatever I'm anticipating. This is not happening, and this is not possible. Nobody can predict the markets, but you can manage your risk well depending upon the risk reward which you get. And I feel that silver at this current stage is placed at a inflection point. Now let us look at one more data. Why I have been using this data even earlier also. Even last year I said, if you in October when I took this session, last phase of bull run in September, that is what I said. If you still want to make small cap returns, there is a possibility that you might get that in silver, because silver is also similar kind of volatility which small cap has. And since then we have seen that small cap has fallen like 30-35% in just past 4-5 months, and silver has not fallen. And now the time has come where the outperformance against small caps, which has just started 3 months back, it will super outperform going forward. So if someone is looking to create money out of small cap, which is not possible at this current stage because of the data which we are seeing, similar kind of small cap money can be created into silver. This is what the data says. This is what the chart is saying. And this data is also above the key moving average and also above the key resistance levels, this ratio. So silver is placed much better than the Indian small caps. That is what this data says. Now let us look at valuations point, because until now we have seen fundamentals, we have seen technicals. Now we will see valuations and trigger for that. Trigger also we have discussed in this session, but once again I'll just repeat about it. So this is data from DSP, how to value gold and therefore derive a pricing for silver. So based on this data, you can go through that, because we want to focus more on silver, not on gold. This presentation will be uploaded on Conviction Club. You can go through this. And it depends upon total money supply which is there in markets. So all this data and approximately on all these calculations, the DSP calculated the approximate valuation or price range for the gold around $3,072 to $4,170. And they did this calculation in September itself, when gold was trading at $2,600. We have already reached 3,000, but that also is a lower end, not a higher end. So the higher end is 30% above from here. For the current money supply and the total mined gold which is there, which one has mined. So looking at these both calculations, the what we say anticipated price for silver is around 3,000, gold is around $3,100 to $4,200 roughly. Now how to value silver? So silver is how to derive the value for silver, and it is done on the basis of ratio. So, and this is on the very high historical data. Current gold to silver ratio is at 84:1. Historical gold to silver ratio has in the Roman Empire has been around 12:1. In medieval Europe, it has during that time it was used to be 9.4:1. In US Coinage Act of 1792, 15:1. US decision to raise gold price to $35 in 1939. That time it was 98:1. Abandonment of gold standard and aftermath 97.5:1. An average in the entire 21st century, the ratio has been 60:1. But currently we are trading at 84:1, which means see how undervalued silver is. So this is gold they have valued, and based on that they are trying to derive a price and valuation for silver. Based on this data, assuming the gold and silver ratio, which reaches once again the historical average, which means 60:1, the derived price range for silver is $51 to $70. Currently, silver is trading at $34, which means the upside potential for silver is at least 50% even on a lower range and 100% on a higher range. Let us say we are saying that we are in a gold bull run, precious metal bull run till 2028, which means we are sitting now in 2025, 3 years. In 3 years, I've been saying about it that if you are able to double your capital every 3 years, you multiply your wealth 10x in 10 years and 100x in 20 years. And that is what we want from small cap, 26% compounded return. And such a possibility is there in silver looking at this data on a higher range. And this is very conservative data because silver can also go up above this ratio. In the next data, I'll share that. So this is gold to silver ratio once again, but plotted into histograms. Just look at this data. This is from 1974 to 2024. This chart shows each year peak spread reading silver price expressed as a percentage of gold for past 50 years. So this is the median range, which is 2% range. Note that reaching 2% is almost routine. So every now and then, once again, we reach that 2% level. Current spread is around 1.15%, which means if you believe in mean reversion, and if you have not gone through my session on mean reversion, do go through that. It is available on blog also. This is telling that mean reversion is imminent. Once again, the silver ratio can touch 2%. So if we are going to see touch 2%, what this means is either gold has to fall for the silver to outperform and for it to reach 2%, or gold might remain flat and silver might outperform, or gold might rise but silver might rise faster than the gold. So during the falling precious metal market, silver might fall lesser. During the rising precious metal market, silver might outperform the gold. So as an investor, you shouldn't be worried about मैंने लेने के बाद नीचे जाएगा क्या. What you should look at, because nobody can predict that. After you buying, whether it will go down or not, nobody can predict that. What you should focus on is I need to be in an asset class which will be an outperformer. Because if you want to invest into precious metals and if you don't want to see a downturn and still make money, it cannot happen. Forget about precious metals in any asset class. It cannot happen. But if you are sure from this data that you will be in an outperforming asset, so there is a high chance as a market participant, what you should expect, you should fall lesser than the market during the falling market. In a rising market, you should do better than the market. And if you are okay with it, then it makes sense. So what are the risks for entire thing what we discuss? Silver has both industrial and investment demand. If economic growth weakens, industrial demand, especially sectors like electronics, solar energy, and automotive, could see a decline, putting downward pressure on prices. This is one of the risk. Then second risk is technological advancements, which might lead to the replacement of silver, and with cheaper alternatives in the industries where it is used. This can lower the industrial demand and caps its upside. So as of now, we have not seen any replacement for silver. As of now, we have not seen any big drastical economic growth weakening, because even if economic growth weakens, there is an investment demand also which can help silver to stabilize. But these are the risks which and monitorables. More than risk, I will say these are monitorables which one needs to monitor while investing in this asset class. So these were the risks, and much more at this point of time. Why? What has happened is, as China, which is the biggest consumer of commodity, even for precious metals like silver, China is the biggest consumer, one of the biggest consumer. So China has given a stimulus, and they are stimulating the economy. So which means that even if something bad happens in US, the China might support this commodity. But this becomes a key monitorable, because we cannot blindly invest into it. We need to be aware about the risk. Now, this was all about silver, and entire thesis on my thesis on silver, how it is looking like, how the data is looking like, and each and everything. Now, before going forward, I would like to share a few things. I've been talking with the community members and say there is a. I've been repeating this about this also. Whenever we share something, people have a recency bias. The most recent session, whatever if they have taken, we have taken, they get highly bullish on that. If this recency bias is there, there is nowhere you can make money out of it, because every time I'll be talking in these language only, you might see that there is a high conviction. But conviction to hai, because there is a thesis, there is a research and each and everything. But much more than that, if anyone wants to invest into any asset class or any idea as such, there needs to be a proper plan. Sometimes what happens is, there are few members who just attend few sessions. There are few members who don't attend later session. For them, they don't have a clear roadmap. And investing is there is a need of a personal roadmap. And that is the reason why we have kept a hand-holding team to create a personal roadmap for you. Because whatever I have shared till now, it is from a purely educational perspective, what I'm looking from for in silver at this current stage. If you really want to plan an investment, because this is a part of our overall FY 2025-2026 strategy. It is not the only one. Few people only invest in a single stock or a single sector or a single, asset class, and they can get their fingers burnt. It is not like that. It has to be a created strategy. It is a part in our overall strategy. Silver is 16 to 17% of the overall strategy. It is not the only one investment. So if you really want to invest in silver, go in strategic way. Don't go blindly, because investing in a single stock, invest in a single asset class is just like gambling. So if do not gamble, understand the importance of asset allocation, because asset allocation sahi hai, baki sab bakwas hai. Everything can remain pending, but if you have not done asset allocation, even if you have highest of the highest conviction stock, but if you're not maintaining your asset allocation properly, it might not help you. So please focus. My importance to asset allocation is 92%. As like what data also says, it is not mine, it is proven by data. The role of asset allocation in giving you return in overall journey is 92%. And 6% is stock selection or timing. So at asset allocation, whenever we say asset allocation, at times the timing will also be there. In what asset class you should be focusing at this point of time, that is told by asset allocation. Whether you need to reduce equity, whether you need to increase precious metals, but most people forget asset allocation, and then later on keep on regretting that I was not able to make money. So this was the important thing which I wanted to share. One more thing is, if you have liked our work and want to invest with us, uh, do connect with our handholding team. These are the numbers. You can take a snapshot of it. Do connect with your with our handholding team to properly plan your investment roadmap. For the capital above 3 crore, you can connect with Ganesh. For the capital about 25 lakh, you can connect with Aditya. For the capital below 25 lakh, you can connect with Shruti.